Greetings, everyone. If there's anything I have learned more than anything, it is the foundation of patience and discipline. In my early years of trading, it was all about learning the buttons and lines and seeking the holy grail. So I would sit down at the market open, have my coffee, push a button, make my trade, and then go play the rest of the day. While there may be days like that, I would confess that the majority of days it takes time, patience, and discipline to wait for my entries. This was the hardest part of trading to learn, as it was against all my thinking, as it meant that perhaps I may need to just sit out certain parts of the trading day as I was losing money during that time. That is when I needed to adjust my style. Since then, I've become more of a profitable trader. Before we begin, let's please the legal eagles and cover ourselves by reassuring you and informing you that trading is a risky business. Most important, today's performance is not indicative of what will happen tomorrow. And the official legal word from the Commodities Futures Trading Commission that covers all trading webinars, including this one today. And in my own words, I know you know this, but in case you didn't, I'm informing you and covering myself from you blaming me for losing all your money if anything I share with you today doesn't go your way. This is for educational purposes only. You can and will lose money in the market. Truth is, trading in the stock market is tough. Never invest more than you can afford to lose. You can lose everything: your house, your spouse, your dog, your mind. Good? Got it? Awesome. Let's move on. As for myself, I currently live in Arizona at the present time. Born and raised in Chicago, resided in great cities like New York and San Francisco as well. Love the outdoors, so if I'm not in front of my monitor, it's all about exploring new places and sites. A little bit about myself and my past as maybe who I am today as a day trader. As a trained educator from my college days, once I had a grasp of what it took to be a successful trader after chasing the Holy Grail for some time, I wanted to give back what I learned and started trading fibs, simply starting to tweet out all my trades and charts to teach others. After some trial and error, I took a bit from each presentation I heard, combined it with my own method, and I come to you today with lessons from the trenches of experience. My trading foundation, which is based on the Fibonacci patterns, began to encompass other patterns, but keeping it simple to find trades that have more of a probability and reduced risk through a combination of moving averages. Nothing new invented here, just greater potential of identifying a trend play in the market. So from YouTube to TwitterTube, it's been my passion and drive to educate and share what's going through my head on any given day through this tumultuous world of social media. The more avenues I can touch to keep the message simple will be my daily purpose until the day they shut down the internet. So, let's get started. I'd like to start out with 3 views of price action on 3 charts and ask you a question following the 3 charts. So, here's chart number 1, the YM, the mini Dow futures in trend. Chart number 2, here you got the E-mini Russell in trend. And finally, the ES, the E-mini futures for the S&P 500 in trend. But before we talk about trend, the question is, what puts you into a trade, and then when do you exit? And I begin with those basics of trading and ask each and every one of you, can you answer those simple questions? It is my hope that you will leave here with some part of this presentation and perhaps supplement it into your own current trading style and find yourself remaining in a trend on an intraday trade, or even an additional way to look at long-term holdings and seek key opportunities, entries, and ways to remain in even longer. I believe there is something for everyone here in learning what it takes to remain in the trend. So first and foremost, I identify myself as a trend trader. I have been around counter trend strategies, have consistently been more profitable when my trend strategy is in play. However, that is part of what makes a market, and so no disrespect to those that take the opposite side of my position. The basics of what it takes to remain in the trade starts with my Heikin Ashi bars. It would take discipline and patience to not only wait for any setup, but to remain in it as well. That is the core foundation of my trading strategy. I'm not all about hitting buttons hundreds of times a day, scouring the market for volume increases in equities. So, let's get started. Tool number 1 is learning how to use trend candles in your trading, a foundation of trend trading. Perhaps some of you may have heard of John Carter's TTM trend candles or Woody CCI. Here you can see the TTM trend versus standard Heikin candles. Not much difference, but as a trend trader, these candles have kept me in trade for the long term, intraday session, swing, or long-term investments. The rules are simple. What I pay heed to the most is when the trend gets strong. I'm looking for candles with solid body and what I call tails or shadows in the direction of price. Here's an example of two trending candles, long on the left, short on the right, with solid body, tails, shadow up in the long and down in the short position. When you put them side by side, candles to keep you in trend, Heikin Ashi candles removes emotion from your trading and to keep you in the trade. Again, when it comes to trend setting bars, we have choices. John Carter's, Woody's, and simply the standard HA bars that you probably find on most of your platforms as seen here on the chart. The settings I keep on my candles, again, we all trade off different time frames. For me, I use a 5 to 10 tick range bar. So for every 5 to 10 ticks price moves, the bar is formed. It is what is meant to represent, simply a trend candle. So let's dive right into what criteria enable me to identify the start of what I've come to know as a trend move. 4 basic criteria on 3 essential charts to identify the trend. From 2 moving average crossovers, market bias, and candles in trend. Sounds too simple, like Jeff Quinto simple. Come on now, we're seasoned traders, you say. Give me an edge that I've been looking for. In your mind, you're saying, but because out of the millions of indicators that are out there, this is way too elementary. Then I encourage you, keep an open mind here when I say, do you have what it takes to remain in a trend move, for instance, on the E-mini Russell for, let's say, 200 ticks on an average moving average study? If you're willing to be open to that, let's see what it takes. Now, if you choose to use the exponential moving average or simple moving average, just make sure all your charts are on the same time frame. And so when we put it all together, we have a basic setup for identifying a market trend. And this is what it looks like. So let's jump right over into the charts. And again, let's see side-by-side comparison of the Heikin Ashi bars that you can see here on the left and on the right. On the left here, we have the regular candles, and on the right, the Heikin Ashi bars. And if you can appreciate just by the fact that we have a mixture of green and red, and again, I know what the red color means, and it doesn't make me feel good when candles go red, but just in comparison to the Heikin Ashi bars, solid bodies, tails up, emotion is somewhat removed from the trade because staying in the trend is what it's about. Now, back to our basic setup. Our basic setup with HA bars, upper study here you can see is a 5 exponential and a 10 exponential moving chart, something that you can all put on your platform as soon as this webinar is over. A study here on the bottom, the 534 exponential moving average. And right here on the right, which is the 5144 EMA to indicate a bearish or bullish bias in the market. And so what I'm looking for when I take these charts and I enhance it a little bit with a little bit of color is a crossover study that enables me to not only have a good entry or a better entry with a higher probability of reward, but also a way for me to remain in the trend. Again, same study. In comparison, I have a 5 and a 10, okay? 5 and a 10. Down below, I have a 534. And over here the 5144. Now what you also see here is in the background is you see a color cloud. The color cloud is simply to indicate when the moving averages cross over. So you would say right now, well, I got red up here, red down here, and red over here means looks like things are moving to the downside, right? Now one of the additional features on my charts that we use in my live trading room is the fact that we're looking for signals. Signals such as when do the moving averages cross over, and here you can see a buy signal, here you have a sell signal with a crossover of the moving averages. Now if you take a look a little bit closer, what you'll notice is that the moving averages are also changing in color, and those changes in color is a moving average called the T3 moving averages. The T3 moving averages is based on Tim Tilson's moving average. Again, nothing I invented here, but applied it to my trading strategy. So this was a trade that was taken back on July 28th. I'd like to go ahead and play it out for you just to show you what does it take to identify an entry and to remain in the trade. So let's go ahead and start play action here on the trade. What we're looking for again is we got 2 contracts set up. First contract is going to come off at 19 ticks with a stop at 20 ticks. And our second one, which is going to be a runner, 50 ticks, most likely we're just going to take that off and manage it on a stop on the way up. And so we see here Price action now hanging out here at the overnight low. As we could see, the setup to the short was already there, and if price action is to continue downside, because there is a bias to the downside now, 50 below the 144 and the 5 below the 34, and the T3 moving averages are downside, then I'll take a re-entry. And so price action holding up here at the overnight low. Let's go ahead and accelerate a little bit here, price action. As we could see, the Heikin Ashi bars are starting to change and move upside as price action comes up here to the 50 period moving average. I got solid body Heikin Ashi bars. All right, as we could see, price action continuing upside, so we're going to accelerate price action here a little bit. And right there, as you see the buy signal on the chart, right there, solid Heikin Ashi bar crossing together with the 534 puts me into the trade. All right, so right now, first thing I'm going to do is manage my stop. I'm not going to move it any lower than the most recent swing side. Now, I could keep it right here under at 20 ticks. I could keep it underneath my entry bar minus 1 tick, or I could simply give it a little bit of distance here as price action with, in my strategy, belief that if price action crosses over together with a buy signal and a cross and a 534 crossover, the price action has a greater probability of moving to the upside. Now, remember, we said we're going to go ahead and remove target number 2 because we're going to just simply trail this. What we're going to do is we're going to accelerate this trade. As we can see here, we just accelerated that 5 minutes ahead, and what happened is stop was moved right to break even as it took out our first target, and price action now 19 ticks in the bag and 18 ticks on a runner. Now the question is how closely am I going to manage this stop on the way up as I am in trend? Right now, this is what I call an emotion-free trade because price action is continuing to move upside. And as I accelerate through this trade to the upside and watch as price action continues to move up, solid Heikin Ashi bar, green cloud in the background, 5 above 34, bias almost shifting to the upside. I'm going to go ahead and accelerate this a little bit. I have now a tool to manage my trade by simply following the tails of each of the Heikin Ashi bars or simply waiting for a red Heikin Ashi bar to turn around like right here, okay, seeing if I get a pullback and to see if price action will continue to the upside. So exactly what I'm doing, price action holding here. This is I'm not going to lose any money on this trade as price action continues to move up. And now at this point, as price action continues here, I simply move my stop up here to the most recent swing size down. And price action continues to the upside. And I simply continue to trail my stop up. Now, one of the additional ways that we can trail a stop up is also what we call super trend stop. And we go ahead and open that. Then on the way up, we actually have a pattern of a stop where we can move. So I can simply keep my stop at each of these levels or keep it a little bit closer based on your comfort level of trading. And we can see here price action coming back down. And now we have a shift in the bias to the upside here. It's price action holding to the upside, and I move my stop up here, right underneath the tail, the shadow of 50 of the Heikin Ashi bar. We're 91 ticks up on a runner. All right, price action continuing up here as we're right now showing some resistance at the overnight high. Again, a no loss trade at this point. Okay, move our stop up a little bit higher here. See price action continuing to move up. Let's go ahead and accelerate a little bit here. All right, and again, we can move it half the distance if we want at this point, or we could simply keep it at place. So let's go ahead and follow on the super trend stop. That's another, again, place that you can keep your trade. Still price action, 50 above the 144. All right, long tail up here. Go ahead and move price action up. All right, 133 ticks on a runner. Again, the question I asked you is, do you have what it takes to remain in the trend? Price action continuing up here. All right. Again, I'm going to go ahead and move this up just a little bit higher on the tail up and down here on the Heikin Ashi bar. All right, there's my next tail down right there, up 156 ticks. And price action takes me out for a total of 167 ticks on that move. Very nice. All right. So, does this work on other charts? Here we see the gold set up to the long side. T3 moving averages crossover, 534 in trend. Trading the live cattle set up to the long. T3 moving averages, again, crossover at the same time, 534. Bias to the upside. Bullish trend. Here we can see Netflix on a weekly chart. One simple strategy. Set up to the long. T3 moving averages crossover, 5 above 34. Breakout. Bias to the bullish. Here we see Krispy Kreme donuts on a 100 tick range chart. Again, breakout to the upside, set up. 534 crossover on a 100 tick range chart. Crossover, 550 above 144. Bullish bias. Trading the Forex, 100 tick range chart to the downside. Price action crosses over. T3 moving averages, 534. Here we see it on an ETF on the IWM, 100 tick range chart. T3 moving average crossover, 5 above 34. Again, bullish to the upside. Here we have it on an index, the SPX. Fellow trading room member drew a chart, rising wedge, comes back down. Rising wedge, comes back down. Rising wedge, where we are now, $1 trillion question. Are we going the same way? Well, I don't know. But I can tell you it's simply set up on a T3 moving average, 534 crossover, can tell me a lot of things, especially if we're in trend. And so I asked you a question today, or I said to you, actually, I found the Holy Grail. And the Holy Grail to me is simple. I found it. It's patience and discipline. So you be the judge. Simplicity or complexity? If it's complexity and it's profitable for you, stay the course. If you're looking for something easy and simple that is profitable, I know that you will find profits in your portfolio with this strategy. I want to thank you for your time and patience. I hope you all gain something from today's presentation and may find some way to implement it into your trading style to keep you more disciplined and a patient trader, as well as to keep you in the trade that much longer. I run a live trading room every day, open to close. I'd like to invite you to a complimentary live trading room session here Thursday, August 13th and 20th. Make sure you copy down the code, pause the video. If you have any questions about joining up, you may email me at david@tradingfibs or tradingfibs.com website. Again, you can find a lot of information at my TradingFibs website, including many of the trading rules that we talk about, including information on the trading room and e-manual. A little bit more of my blog site here. You can see the free Thursday live trading room and any of the blog posts that I post every week or on and off every session. That concludes today's presentation. One simple strategy, any market, any chart, any time frame will keep you disciplined. Have yourselves a great day, a good night, and good trading.